Good afternoon. Welcome to Facebook Live. Wes Moss here. Are we live?
Not yet. Hang on.
Okay.
It's still spinning.
Now we're live. Good afternoon. Welcome to Facebook Live. Wes Moss here. Wednesday afternoon in our mini-series, How You Can Retire Sooner Than You Think. Today, the biggest mistake that retirees can make in retirement, or the biggest mistake a retiree can make. And it has to do with falling short on your rate of return as I'm jostling the table. And I want to give you a couple quick advice steps here. This is not necessarily life-changing advice. These are life-changing numbers. So I'm really just talking about facts that really impact how much money you end up in retirement. So I want to talk through this with you and talk about the biggest mistake I've seen investors make, show you a very cool chart, very important chart, and then we'll wrap. So here's the deal. I want to tell you a quick story. First of all, the big mistake that I talk about in the book is that when retirees who have been, let's call it methodical investors over time and had decent results, all of a sudden become stock traders. They go to an online trading seminar, they watch the options monster on television, and all of a sudden they think they need to get really active and start trading and turning a lot. In the book, I talk about a story called I call him Dr. Gamma. Really a fictitious character, but a very real life scenario that I've seen happen. And that's Dr. Gamma, who all of a sudden he's working 80 hours a week, retires with a couple $1 million, and all of a sudden becomes a stock trader when he's no longer working. And what happens is that he ends up chasing all of these seemingly great deals. Well, this stock yields 8%. This stock yields 15%. I'm going to jump in on this bandwagon. And they ultimately end up ruining their rates of return, and they oftentimes lose a lot of money. And it's a mistake to become this active trader thinking that all of a sudden all this new activity is going to lead to better results when it actually does the opposite. And here is proof of how that happens. I'm going to show you this chart that is in a presentation I do for the book. If you can see this, the behavioral effect on investment returns over a 20-year period. So this is 1996 to 2015. Notice here at the bottom, all of these areas, REITs, S&P 500, bonds, gold, international stocks, these are all the main categories you have already in your 401k plan. And the rates of return here these are emblematic of what's happened over 20 years. These are average annual returns. So REITs at almost 11%, S&P 500 at over 8%. And by the way, that's with two giant corrections, if you can see right here. Bonds have averaged 5.3%. Gold at 5%. When we come all the way down here, oil, here are home prices, you can see, have averaged 3.4%. This is what's so remarkable about this study that I've seen repeated over and over again. This green is the average individual investor in mutual funds. 2.1%. Remarkable that all the main choices we have in our 401ks, almost all Americans that have investment accounts, these are the main items on the menu to invest in, all have done double, triple, quadruple what the average investor has done. So the S&P at 8, REITs at 10, bonds at 5, yet investors average about 2. There's a lot of variables that go into that, but one of the very biggest variables has to do with an investor getting overactive and all of a sudden thinking they've got to be buying and selling. And what happens is that they end up chasing their tail and buying when a trend is really hot right before it drops, and then getting out of a trend right before it goes up. It's this counterintuitive cycle that happens. So I want you to remember this really important chart that we just went over, and you don't want to become a day trader or a massive trader when it comes to retirement. That leads me to a topic called Advisors Alpha. This is a study done by Vanguard, and I place a lot of regard on these Vanguard studies. They've spent years trying to figure out what really helps your rates of return. And this isn't for everyone. So about a third of America, let's call it 25 to 30% of America, wants to be an investor that completely picks all their own mutual funds, their own stocks, and they do this all on their own. And those are do-it-yourself investors, and some of them do fine. The other 2/3 of investors let's call it 70% of investors, are going to go get help somewhere. They're going to find an advisor, whether it's at a big Charles Schwab or a Fidelity or a Morgan Stanley or a Merrill Lynch or an independent registered investment advisory firm. There are lots of choices to go find advice. And here's what happens is that Vanguard has discovered that over time, and I know I need to smile more here, I got you. Over time, the advisor, it's called alpha, which is the rate of return they can add to your long-term rate of return, is very significant and mathematically proven out over many, many years. And that's what this Vanguard study called Advisors Alpha talks about. And what it says effectively is that if you've got an advisor that's a good coach, the advisor can add close to 3% or more on average to your rates of return. I go back to my chart. The average investor is only averaging 2% a year. Well, add at least 3% to that. Or go to this rate of return of 5% and add 3% to that. These numbers are giant if you really think about it. So the advisor alpha, how does an advisor that's objective add value? Well, several ways, and I detail this in an article I've written about this. According to Vanguard, you have rebalancing can add a certain percentage every year. Asset allocation can add a certain percentage. The withdrawal strategy that your advisor implements, particularly in retirement, can add a certain percentage every year. Making sure that you're in a tax-effective way accessing your money. We call this a withdrawal strategy. That can add a particular percentage per year. And then one of the most important parts of all this is behavioral coaching and making sure that an advisor helps you understand where you're headed and a strategy. So there is so much power in the conviction of a strategy. And the way I do this versus another advisor isn't necessarily the main variable here. It's having a proven strategy, and there are dozens and dozens of proven strategies that as an investor you can implement. It's not just the way I do it here, that's an income-oriented investing. There's growth investing, there's growth at a reasonable price investing, there's opportunistic investing. But there is so much power if you have the conviction of a strategy. That's why an advisor can help so much. Again, you're looking at me, you're saying, Wes, well, you are a financial advisor. And I'm not saying you use us or me at all. What I'm saying is that there is so much power in having a strategy that it'll lead you to avoid this giant mistake that investors and retirees very often make. They become big-time active stock traders, and this is the result. They leave all these wonderful returns behind, and they end up making 2% a year, which quite frankly doesn't get anybody, unless you're a billionaire already, to your financial goals. So I want you to remember this. It's something that I've written about. It's called Advisors Alpha on my website under the Money tab. You can find a story called Advisors Alpha. What's the value of a financial advisor or a financial advice? The value of a strategy. I so believe in it, and I'd love for you to be able to find that. Also, of course, all this is in the book. You can retire sooner than you think. You've heard me talk about it many, many times, but there's a whole chapter in the book, one of the sections that talks about these very ideas that we're reviewing right now. I guess I'm supposed to hold it up right here, and Mallory can zoom in and see if I can hold it steady. With that, thank you so much for your time joining Facebook Live. Share this if you can. You can also see this on our YouTube channel, Wes Moss Money Matters. I encourage you to subscribe to the YouTube channel. Thank you so much for listening, and have a wonderful, profitable rest of the day.